Welcome back, and you're watching Market Fatafat on ET now. Let's bring on board Ashish Kyal to talk to us about the technicals and which stocks has he picked up for us today. And Ashish, very good afternoon to you. And the first stock that I've picked out is Whirlpool, doing nothing for the longest period of time. But today the stock is up 3% in trade. What are the charts looking like for this one? Finally, a turnaround.
Yes, it looks like so. It has been quite some time since the stock has been correcting, and after a huge consolidation, we are seeing a very good breakout happening on in today's session. It has been some time we have seen it not moving by 3%, and today we can see it happening with huge volumes. So the overall trend for the stock is bullish. I'm expecting that it should reach towards the level of 1450 and possibly break above that as well. On the downside, 1300 remains a very important support.
All right, so that's the view coming in on Whirlpool, but I will talk about IDBI Bank. And why is this one in focus? Because we've got news, source-based news coming out from news via agencies, and what they're saying is that RBI has begun evaluating at least 5 potential bidders interested in picking up a majority stake in IDBI Bank. Remember that this is source-based information that we are picking up from agencies. What the sources have also mentioned that Kotak Mahindra Bank, Prem Vatsa-backed CSB, that is Catholic Syrian Bank, as well as Emirates NBD are among those that have submitted the expression of interest. Also, the other details that the sources has given us is the fact that the potential bidders have already begun due diligence on the bank, who added financial bids were likely to be placed later this year. Also, sources have said that RBI is also conducting a fit and proper evaluation, including extensive background and financial checks on the potential buyers, which is a crucial step before the investors are allowed to pick up the stake in IDBI Bank. And also, what the sources have told via agency is that potential investors have raised questions around the extent of government control in IDBI Bank after the divestment, since it will retain a 15% stake and LIC will have 19% stake in the company. So this is all source-based information for now that we're picking up is the fact the RBI has started evaluating potential bidders for IDBI Bank, and Kotak Mahindra Bank, CSB Bank and Emirates NBD are in race for it.
Okay, keep an eye out on that one. Let's move on and talk about Campus Activewear. This one is buzzing in trade as well, quite active, and it jumped as much as 5% intraday in trade as well. As of now, still holding on to gains of 2.5%. Now, why is that so? Because what has actually come in is I've actually made an acquisition of land in Himachal Pradesh. This land parcel they've acquired from Marico Industries in Himachal Pradesh. Paunata Sahib, so this is where they've acquired the land. Now the land measures are at 30 bigha and 9 biswas, and the acquisition is done at a price of around 17 crores. The company believes the acquisition will help expand its capacity for manufacturing semi-finished goods and assembling footwear. On the back of this, we're seeing a bit of a buzz coming in on the stock.
All right, so that is Campus Activewear for you. But let's shift focus and let's talk about Titan. And if you look at Titan, the performance has been pretty dismal or very muted when you see a YTD performance for this particular counter, Ashish. But we cannot take away the fact that this has been a huge wealth compounder as well. But for the near term, how are the charts looking for Titan?
See, if you look at Titan, post the March low, which it formed around 2350, we have seen a smart recovery on the upside over past few weeks, and currently it is consolidating. I think it's going to give a very strong breakout on the upside, and we should see the previous peak levels of 2750. So on the chart, it's looking very promising. We have had a moving average crossover. It's finding good support there, higher high, higher low formation. So 2750 is the target, which is the previous peak level. And on the downside, the support for Titan remains at around 2500.
Okay, keep an eye on those levels for Titan. Vemakshi, we have Infosys that will be reporting its numbers today as well. What are the expectations here?
Well, Vinny, you're right. The stock will be reporting its Q4 earnings today. We are expecting a weak set of numbers to come in for Infosys as well. Now, as far as the company's revenue is concerned, in dollar terms, it is expected to come in at 4,720 million, which is an uptick of nearly 1.3%. And in fact, when we're looking at the guidance, that actually implied a growth of -1 to 0.5% quarter-on-quarter growth. The rupee revenue is expected to come in at 38,850 crores. and that is an uptick of nearly 1.3% as well. CC growth is also expected to come in 0.7%. Now that is against the 2.4% growth that we had seen earlier. EBIT margin is expected to remain flat at 21.5%, but it is the PAT that is expected to see a decline of nearly 0.6% to 6,550 odd crores. Now, as far as Q4 is concerned, we're expecting that it could be a seasonally, it is generally actually a seasonally weakest quarter for Infosys. We could see some slower ramp-ups, and that could in turn impact revenue growth. Faster USD growth implies currency tailwind. So given all those factors, we have Infosys in focus, a weak set of numbers expected, and that is the reason why the stock is declining in trade today.
All right, let's shift focus to Rainbow Children Hospitals. And why is this one in focus? Because HSBC has come up with a note where they initiated coverage on the counter with a buy rating, and they've set a target of around 1,025 rupees per share. What they're saying, there are compelling investment case to play the niche pediatric care market in India. They are expecting the profit after tax to double over FY 22-25. They also believe that Rainbow's position as a leading pediatric care provider is largely unchallenged. They are also forecasting revenue and EBITDA CAGRs of 19 and 20.1% over FY 22-25. And like I mentioned, they are expecting profit after tax to grow at least 2 times by FY 25. They also believe that the market is yet to fully price in the growth potential for Rainbow's niche pediatric model. The bull case scenario implies a target price of 1,243, which indicates approximately a 66% upside, and the bear case scenario implies a target of around 486, which is approximately a 34% decline.
Let's move on and talk about HDFC Bank then. Lisa, what is the news flow here today?
Report its earnings on 15th April, that is this Saturday. So, well, let's look at what's expected from HDFC Bank. The net interest income is expected to go up 25% on year-on-year basis. The operating profit is expected at 19% growth. Provision is also expected to see 9% on sequential basis, and PAT is also expected to see 19%. So, healthy number is expected from HDFC. It's also important to note that in its recent quarterly update, HDFC had reported that its loans has marked a growth of around 6.2% on a sequential basis, and also its advances and loans has expanded 6.5% on a sequential basis. So, well, what's expected from HDFC is that its asset quality is expected to be stable, and also the key commentary to watch out would be on margin, because that is important as the bank is focusing on deposit mobilization, and also the credit card commentary and commentary on the margin integration is also likely to be tracked. So, well, this comes in the midst of the financial results is coming in the midst of RBI pausing its rate hike, but they are expecting it to see a possible increase going forward. So, well, HDFC Bank results will be in focus and quite awaited.
All right, thank you so much for that, Lisa. But Ashish, coming to you, Bajaj Finserv, how is this one looking to you on the charts? Do you think it merits a relook now at least?
Yes, absolutely. Bajaj Finserv formed a double bottom pattern. There is a strong positive divergence on the daily chart, and managed to cross above that 20 days average as well. So looks like the overall trend is now reversing back on the upside, so it can be a good value play. From here we can expect a momentum to generate on the upside towards the level of 1450, and the support for the stock is at 1280 levels.
Keep an eye out on those levels for Bajaj Finserv. Stock number 29 for today, we'll talk about Interglobe Aviation. Now, Kotak Securities has increased the fair value, that's the target price for Interglobe Aviation, to 2,725 rupees per share from previously 2,550 rupees per share. They believe this is mainly going to be on the higher yield assumptions. Overall, they believe that the airline industries have followed the replicable and value destructive load maximization strategy for long, and now improving consumer spending behavior in the post-COVID times is making the incumbent in Indigo shift towards the revenue maximization strategy. They also say that this is less replicable by peers, as it requires a combination of assets that Indigo has built over a period of time in terms of network strength, capacities, as well as customer connect as well. On the back of this, they're quite positive on Indigo in the aviation space, and they've increased the target price for the company. As of now, the stock has given up all its gains and trading at the day's lows.
All right, moving on, let's talk about Anupam Rasayan, and this one is in focus because he signed a letter of intent worth about $182 million, and this letter that they have signed is with the leading Japanese multinational company. The letter of intent is for the next 7 years with the Japanese multinational to make 3 specialty chemicals products that will be manufactured in Anupam Rasayan's existing manufacturing facility. And on back of this particular development, you can see Anupam Rasayan, the stock is trading higher by about 3.8%, having hit over 1-year high.
Okay, let's move on and talk about JB Chemicals on the charts then. Ashish, how is this one looking like from the overall? Do you think JB Chemicals is set for a good run-up? In the last 1 month, 11% return is what we're seeing for JB Chemicals.
Yes, if you look at the chart, it is strongly outperforming. The stock is at 52 weeks high. There is no resistance on the upside that we can see. The momentum is strong. So I would use any dips from here towards the level of around 2140, 2130 as an opportunity to re-enter the stock here, and expecting a target of around 2300 on the upside with support at 2050. So use the dips to buy, and as long as 2050 remains intact.
All right, moving on, Vemakshi, RVNL, a brand new day, brand new order win.
Cheryl, no surprise there. The stock is in focus on the back of an order win. In fact, not just today, in the past few sessions, in fact, the stock has been in focus on the back of order wins as well. But today, the stock has received a letter of award from Northwestern Railway, and this is for provision of automatic block signaling on Madar Sakun section of the Jaipur division. Now, this contract is for 9 months, and the consideration for this contract is nearly 63 crores. So that is the reason why RVNL is in focus. The stock, as you can see, is trading higher by around 1% as we speak.
Let's move on and talk about an auto name, and TVS Motors is what we have picked out for us, Ashish. How are the charts looking for this one? As of now, the stock is trading at the day's highest point. What is the run-up you're expecting here? What are the target prices?
TVS Motor has shown a very classic pattern of consolidation for many months now, and it looks like it's just about to break out. And the sector is also supporting. We can clearly see what happened with Tata Motors few days back, and TVS Motor is just again from that space should do good. So on the upside, the target for TVS Motor is going to be around 1300 over short term. But if one can extend the time horizon and look at the long term perspective, we are expecting it can also touch 1500 levels. And from the downside, the support for the stock is at around 1090.
All right, moving on then. From one auto name to another one, and Eicher Motors, Lisa, why is this one in focus?
Reason being that Goldman Sachs has initiated coverage on the stock at a target price of 3,660, giving a buy rating. Well, the investment case that they have presented is quite positive and looks promising, as they expect Eicher versus its peers that in the EV disruption, it will have lower risk compared to its peers, and that is because it endured a long R&D cycle duration, and also the specifications for its premium vehicle, that is of a very high standard. So they believe the market is underestimating the upside opportunity for Eicher Motor, and also the margin dynamics is expected to improve on the back of increasing mix of their 650cc vehicle. They expect the EPS CAGR to grow at a 22% growth over FY 23-26E, and they say that Eicher is trading at a forward PE of 23 times versus its historical median of 29 times, making the valuation quite attractive. So, well, on the back of this, Eicher is in focus, and as we can see, the stock is near its day's high and up about 3% in today's trade.
Okay. That is Eicher Motors for y'all, but a short while ago we did have the Amphi data that did come out as well, and let's just bring on board Sunil Subramaniam to talk to us about how the data is looking like from Sundaram Mutual Funds. Thank you so much, Mr. Subramaniam, for joining in with us this afternoon. What is the first cut that you're making in terms of the inflows and outflows this time in the month of March? How are they looking like?
See, I think this time the distortion was because of the finance bill which got passed, and suddenly they removed the taxation benefit for debt mutual funds from 1st April. So obviously, post from 27th to 31st March, I think the industry saw massive, the estimates are about 40 to 50,000 crores of money flowed into debt mutual funds of a medium-term duration, like target maturity funds, corporate bond funds, banking and public sector debt funds, because that's the last opportunity to take the indexation benefit. So some of that money came from the short-term liquid funds which people were parking. Some money came from equity funds switched into the debt schemes, and some came from the savings accounts of banks where they give last-minute checks and balance transfers on the 31st of March. So I think we will see that the debt, MF category would probably see a sharp spike upwards. That's what the data should show. Other than that, I think the SIP book should continue to be strong. I don't think that's an issue. Another aspect here is that from April onwards, we do expect the hybrid funds to get interested because they are the substitutes for debt, because they carry a taxation, either an equity taxation or the indexation taxation, depending on when. So I think that we are in a time when this transition is happening. So March should show a spike in debt, long-term, medium-term debt inflows.
Right. Point taken. Also, like you mentioned, you're expecting that the SIP inflow number to sustain. Right now, we don't have, but we've seen month after month that number is now staying above the 13,000 mark. Do you expect this to actually continue to stay that high, given the fact that we've seen a lot of churning out or a lot of regulatory moves come in this particular domain?
No, I don't see that a challenge to the SIP. In fact, because of the volatility in the markets, right, most of the advisors and distributors are actually pushing their customers not only to start long-term SIPs, but even if they want to put a lump sum, I think there is a trend to say spread your installment over the next 6-12 months. So STPs, which are systematic transfer plans from liquid schemes into equity, are also, I think, will be the preferred mode for people. In a volatile time, if you spread your risk, then the buy low, sell high concept comes in. Rupee cost averaging comes to in its full play. So I expect the SIP number, STP number to remain strong this month and in the months to come.
Right. Mr. Subramanian, just one more point that I do want to talk about is the total asset under management. I just want to understand, because when you look at it, since November 2022, this is the first time that level is below that level as well. We are currently at 40 lakh crores approximately, and 2022 was 40.5 lakh. So this is those levels in the last 6 months that we've seen coming in. How should we be viewing that then?
I think there are two things here. One is that the markets have been flat, right? They haven't moved. Second is, if you take away SIP inflows, right, I think the industry has been seeing redemptions because people have been booking profits for their investments over the past years. So if you take away SIP flows, gross lump sum flows minus redemptions would be generally a negative number. That's what has made the assets under management come down. Third thing is that I think we are seeing the corporate capex cycle revive. So corporates who had parked their surpluses because they didn't have any capex plan in earlier years in liquid and short-term debt have been drawing down, because we are seeing that private corporate capex is getting a big lift. So people are liquidating their cash investments and making orders for their capital equipment. Before they go for bank financing, they'd rather put their equity in. So it's a combination of these factors which has seen that net outflows have been there from the industry. The markets haven't gone anywhere over the last 1 year. Hence, you will see that there's a slight correction, as you mentioned. Assets under management are at a 15-month low.
All right, Mr. Subramanian, we leave it there. Thank you so much for joining us on the show and giving your first take on the AMFI data for the month of March. That was Sunny Subramanian, who was giving his views on the AMFI data. But let's continue with the stocks that are moving in trade. And Ashish, Gujarat Ambuja Exports, how is this one looking on the charts to you?
See, Gujarat Ambuja Export has been a laggard for quite some time, but again, it formed a triple bottom pattern formation around 230, showed a very strong rise from there, and even today the stock is up sharply towards that 259 levels. So I think it's going to give a breakout about that 260 mark, and if it manages to close above that, we can expect the pattern target to be around 290. So the risk reward is good. 290 is the target. On the downside, 240 can be maintained as a stop loss.
Okay, let's move on and talk about Torrent Power. This one is in focus because after the company last evening announced that they bagged a contract to supply 920 megawatts of gas-based electricity from its DGen as well as SUGEN plants, and this is under the tender of NTPC Vidyut Vyapar Nigam Limited. So on the back of this, we've seen that the stock is in focus today. Now, the Ministry of Power had designated NTPC Vidyut as the nodal agency for procurement of up to 4,000 megawatt powers from gas-based plants during the identified crunch period of April 10, 2023 to May 16, 2023. On the back of this, we're keeping an eye out on torrent power.
All right, let's talk about Surya Roshni then, and this one has actually risen to the highest level since October 11, 2021. The news flow surrounding this particular counter is the fact that Mukul Agarwal has bought about 1.1 million shares of the company. This is as per the NSE data, and after this, Agarwal's stake now is at 2.02% as on April 12th versus 1.71% at the end of December. So that's the reason why this particular stock is flying high in trade today. 3% uptick coming in for Surya Roshni as we speak.
Let's move on and talk about RCF on the charts. Ashish, what is your understanding for this one? Today it's not doing anything exciting, but the last 1 week it's managed to gain almost 8 to 9%. So what are the targets that we should keep an eye out on?
See, if you look at the space of chemical fertilizer, most of the stocks have been doing well, and RCF is no exception. The stock has shown a very smart recovery from the lows of 90, nearly around 8-9% up already. It's consolidating today. That's a good sign because it's releasing the overbought zone. And now, if the stock manages to cross above 110, we expect it to reach towards 120, which is 61.8% PBO level. So in a nutshell, I'm expecting the stock to be at 120 levels over the next few days. On the downside, the support for the stock is at 102.
All right, moving on. Vemakshi, SRF, why is this in the spotlight?
Cheryl, this counter is definitely grabbing headlines after the company announced that its pharma intermediates plant has been commissioned and capitalized. And they had actually brought up this plant for undertaking precursor process for production of pharma products at Dahej, and this was for an aggregate cost of around 223 crores. So the plant being commissioned as well as capitalized is the reason why SRF is in focus today. The stock, as you can see, is trading higher. It is up nearly 0.6% as we speak.
Let's move on and talk about Arvind Limited, and this one is in focus because the brokerage Sunidhi Research has initiated coverage on this one. They believe the robust AMD growth amidst the down cycle inflection point in textile is something that will work out for Arvind Limited. They've given a buy rating, target price of 195 rupees per share. Not just a textile company that Arvind is what they're highlighting, but an incubator of niche futuristic technical textile products. Now the revenue CAGR in the textile segment for the growth that they're expecting over there for FY22 to FY25 is likely to rise at 3.77% from 2.83%, which was in the last FY18 to FY22. Also, they believe that the AMD business, which is around 15% of their revenue share as per FY23, when you look at it, expectations, it's expected to beat the textile business as well. So strong growth is expected in both these segments, and that is why seeing a bit of a buzz coming in around Arvind Limited.
Ashish, HPCL, you have really speak about why this one is focused on the fundamentals on a brokerage note, but on the charts, how does HPCL look to you, given the fact that now we've seen a rise in crude prices once again?
See, if you look at the chart, the stock has not done anything. It has been correcting, not able to take out the 245 levels, and now reversing back from the 230 mark also. So it's seen a downward trend. I think over short term, do not expect anything on the upside in the stock. Rather, we can expect the stock to reach towards the level of 210 lower, where the support lies. So 210 is the target. It's a sell call, and on the upside, 234 remains a very strong resistance.
Call coming in for HPCL from Ashish as well. Morgan Stanley also has downgraded the stock. Ashish's target is 210. It's a sell call there. But on that note, we are absolutely out of time on this edition of Market Fatafat. Thank you so much, Ashish, Dhwani, Vemakshi, as well as Riza for joining in with us this afternoon. And it's a goodbye from Cheryl, myself, as well as the team who put this show together.